Hi, today what we are going to do is we'll look at a real world company and we'll try to look through its income statement and balance sheet and understand financial ratios and how to analyze a company. Now firstly, as you would know, to analyze a company we need its report card. We need to see what the company has reported about their financial performance, and this report card you get it from their annual report. Now annual report is something that you will get it from the investor relations segment on their website. So all publicly listed companies have an investor relations section on their website from where you can download all the annual reports. Now here today what we are going to learn about is financial statement analysis, and the company that I have chosen is Britannia Industries, a company which is into FMCG products, biscuits and other food items based out of India. Now that is the company that we are going to analyze. Now here what you can see is the annual report, the 2016 annual report of the company. And now if you see, annual report is a marketing material, and at the same time they also give a lot of financial data. We will directly move to the financial data, but yes, as an analyst you need to know about the business, you need to read about what is happening in the company. All those things are also equally important as the financial data. Let's quickly move to the financial data. So here the management has given a lot of commentary about how their business has performed, right? So we'll directly go to, just a second. So this is an annual report, close to a 200-page document, and we will directly go to the balance sheet and the income statement. Right now, let me just quickly run you through the balance sheet of this company. Right now, you must have studied that in the balance sheet what you see is the assets, the liabilities, right? Now that is exactly what we are going to see here. Now this, if you see, is the total assets of the company. Now what do you mean by assets? Assets are everything owned by the company. Now here what we see is all the assets owned by the company as of March 31st 2016 and March 31st 2015. Right. So here if you see, the entire assets section is divided into two: non-current assets and current assets. Non-current assets are assets which are more long-term in nature, something that is not going to get converted into cash anytime soon. On the other hand, current assets are more short-term in nature, something that will quickly get converted into cash. Now let us try and understand this. So what you have here is, within non-current assets, what you have is your fixed assets, right? 626 crore worth fixed assets, wherein there is tangible assets, intangible assets and capital work in progress. Now what do you mean by this? Tangible assets means everything that you can touch: land, property, machines, TVs, ACs, furnitures, fixtures, computers. All these things form your tangible assets. What do you mean by intangible assets? Your goodwill, patents, copyrights, trademarks, softwares, all these form your intangible assets. Now we see something new here: capital work in progress. Now what do you mean by capital work in progress? Capital work in progress is any asset which is still in the process of becoming an asset, right? A building which is under construction, a road under construction, right? So companies, they don't report it as a fixed asset. Instead they report it as they don't report it as a tangible asset, but they report it as a work in progress asset. Now if you want to really know more about this, if you see, there's something called as notes, right? So if you go ahead, if you see notes, so when I go to note number 9, I can actually see what exactly is this. Now there are two ways of doing this. Either you can directly go to note number 9, basically you just, this way you can slowly go to note, this is note number 2, note number 3, note number 7 and slowly note number 9. This is a very inefficient way of doing it. A much faster way is just searching for this number. That is, just search for this number
and it directly takes you here, and here you can know that what all is there. So if you see, there's freehold land, there's leasehold land, there's buildings, plant and equipments, furnitures, motor vehicles, office equipments, right? They also have some leased assets. And in the intangible assets, you see trademarks, designs, computer softwares, right? Now this is nothing but the breakup of fixed assets. Now this is what you need to understand. Whenever you are understanding these numbers, if you really want more detail about these numbers, the place where you need to go is the notes and schedules, right? So yeah, so that is what it is. So all together the fixed assets is 713 crores. After that, the company has some non-current investments worth 551 crores. Deferred tax assets. Now deferred tax assets, you can see this as some as an asset wherein company has already paid some taxes in advance, but then because there is some difference between Income Tax Act and the Companies Act, but the truth is these benefits are going to accrue in future, so company reported as an asset. Then you see long-term loans and advances. These are any kind of loans that you have given to intercorporate loans, or some advance payment for a new machine or something that you have purchased. And then there's this catch-all category, which is other non-current assets. So together all these things form your non-current assets. Then you have your current assets. Now in current assets, what you have is, you have current investments, which is worth 343 crores. Now what is current investments? Current investments could be your FDs, your mutual funds, liquid mutual funds, or it could be equity or debt mutual funds. So companies usually park their temporary money in the form of mutual funds or some kind of investments. Then there is inventories. What do you mean by inventories? Inventories are nothing but your stock, finished, work in progress, or the raw material. Now what do you think could be inventory for companies like Britannia? It could be finished goods, the biscuits. It could be work in progress inventory, which is still in the process of becoming a finished good, or it could be raw materials, flour, wheat. All these things can be included as a raw material. Then you have cash and bank balances. Now cash and bank balances are the cash, the petty cash that you have, and at the same time the cash that is lying in the balance sheet, in the bank account, in different current accounts that you have. And short-term loans and advances are any kind of short-term loans that you have given to someone, wherein you're going to get the money within a year itself. So what you see is the total assets of Britannia is 3067 crores, which means everything owned by this entity, which is Britannia, is worth 3067 crores. Now think of it this way. Let us say I am 100% shareholder of this company. Okay, I am 100% shareholder of Britannia. Can I say that indirectly all these assets are mine? No. Because in a company, there is not just one claimant, there are multiple claimants. And we as shareholders, I might be the residual claimant in the company, the last claimant in the company. So the company's assets have other claimants also. Now let us look at that. Who owns these assets? What are the sources of those assets? And that is where we need to look at liabilities and equity. Next, let's just look at the liabilities of this company. So if you see here, what you can see is non-current and current liabilities, right? Now what do you mean by non-current liabilities? Non-current liabilities are, firstly, what do you mean by liabilities? Liabilities means something that the company owes. If asset is something that the company owns, liabilities are something that the company owes. So which means here Britannia owes some long-term borrowings worth 0.49 crores, hardly anything, basically 50 lakhs, for close to 50 lakhs, and they have some other long-term liabilities which is around 21.05 crores. Then if you see, you can also see the current liabilities. So in the current liabilities, you can see trade payables. Now what do you mean by trade payables? Trade payables are nothing but these short-term payables that you have to your suppliers. So basically, let us say Britannia has purchased packaging materials, Britannia has purchased some raw materials, Britannia has purchased wheat, Britannia has purchased chemicals. Now they don't do business on cash. Britannia might owe some money, right? So everything that the Britannia has to pay to its suppliers would come here. Then there are some other current liabilities. Now to really know about all these things, we have to go to the notes. Let me just quickly show you this. So I'll just select this and I'll just search for this number, and here I get this. See, so there are some current maturities of finance lease obligations, some interest accrued which have still not been paid, some unclaimed debenture interest. So now all these things together forms your current liabilities or your other current liabilities. And then you have your short-term provisions. Now what do you mean by short-term provisions? Short-term provisions means any kind of provision that you create wherein you are expecting that there's an expense or a payment that would come. So you've just created a provision for that. Now all these things together form your liabilities, right? So what you know is the total assets of the company is 3067 crores. Then you have total liabilities, wherein your non-current liabilities is 21.54 and your current liabilities is 1372. Everything else that is left should be equity. Now here there is a special line item, capital subsidy. You won't see this in a lot of companies, but it's a part of a liability, something that the company owes. And then the shareholders funds, so which is broken into share capital. Now what is share capital? Share capital is nothing but total number of shares into the face value of every share, and your reserves and surplus is nothing but your accumulated profits over the years which are retained. Now this doesn't mean that they are cash that the company has, right? It is just that we are just doing whatever is the total assets of the company and subtracting the liabilities of the company. Right? Now to analyze this data, you don't want, or to calculate ratios, you don't want these ratios or these numbers to be here in the PDF. You usually want those numbers in Excel to actually understand numbers. And that is exactly one thing that a financial analyst has to do, is taking all these data from PDFs and other documents into Excel, into a spreadsheet which allows you to analyze these data. Now here what I've done is I've taken all these data into the Excel file that you can see here. So this Excel file here gives you the balance sheet of the last 2 years, right? So it gives you the balance sheet of 2015 and 2016. So I have fixed assets, non-current investments, deferred tax asset, right? All those assets that we discussed and all those liabilities that we discussed, and then the total shareholders equity or the total net worth, right? And what you also see is this: your total assets should be exactly equal to total liabilities and net worth, right? So here we see the balance sheet of the company for the last 2 years. So where I have sourced this data from? I've sourced this data from the PDF annual report, which is this, right? So you usually take the data from the annual report or the PDF file and put it on Excel. And usually when people look at financial statement analysis, they try to look at the last 3 years, 5 years, 10 years. Right now there's no right or wrong answer here, but then yeah, you need to look at historical data just to see how the trend has been. Although here we are going to deal with 2 years of data. Here our purpose is to calculate these ratios and try to see how the company has been performing and have a kind of comment on how the company has been doing.